You're losing money every single time you open an invoice. Not in a dramatic way, not in a way you'll notice on any given Tuesday, but silently, steadily. Every duplicate payment, every missed discount, every data entry typo, it's draining your business dry. Here's the stat that stopped me cold. Over 30% of invoices processed by small businesses contain discrepancies. And in 2025, 66% of finance leaders said their manual workload actually increased, despite trying to automate. Think about that. More automation tools than ever, and somehow more manual work. Something is fundamentally broken. And today, I'm going to show you exactly what it is, and what the smartest small business owners are doing instead. Let's go back to how invoice processing has always worked. You receive a bill, maybe via email, maybe as a scanned PDF, maybe someone hands you a piece of paper. You, or someone on your team, opens it, reads it, types the numbers into a spreadsheet or accounting software, hopes to God they don't mistype anything, then chases approval, then files it. For one invoice, this takes anywhere from 15 to 45 minutes. Multiply that by hundreds of invoices a month. That's not admin work. That's a part-time job you're paying for, with zero ROI. And the real killer? This isn't just time. It's financial exposure. Duplicate payments happen. Late fees pile up. Early payment discounts, the ones that could save you 1 to 2% per invoice, get missed because the process is just too slow. The hidden tax of manual invoice processing is real, and most business owners never see it on the balance sheet. Now here's where it gets interesting. The old solutions didn't work either. And you need to understand this before you buy any software. In the early 2000s, basic OCR came out. Optical character recognition. It could scan a document and pull out text. Sounds great, right? Wrong. The moment an invoice had a different layout, a rotated scan, or a handwritten note, the whole thing broke. You spent as much time fixing errors as you saved. Then came rules-based automation in the 2010s. Better, but still brittle. These systems worked well for massive enterprises pushing thousands of identical invoices. For small businesses with 30 different vendors and 30 different invoice formats, a nightmare. You needed one system for your landlord's invoice, a different setup for your supplier, another for your overseas vendor. Most small businesses gave up and went back to spreadsheets. That era is over. Large language models changed everything. The same technology behind the most powerful AI tools on the planet, applied to invoice processing, means machines can now read invoices the way a human would, not just extracting characters, actually understanding context. A Japanese invoice formatted in yen? Handled. A Sao Paulo supplier with a completely different tax structure? No problem. A scanned PDF with a coffee stain on the corner? Still processed at over 99% field-level accuracy. That's not a marketing claim. That's where AI invoice automation actually is in 2025. Here's how it works, step by step. First, intake. Every invoice, regardless of source, email, upload portal, scanned paper, vendor portal, gets pulled into a single pipeline. One place. No sorting, no routing, no chaos. Second, extraction. AI-powered OCR combined with natural language processing pulls out every critical field. Vendor name, invoice number, line items, quantities, amounts, tax, due dates, payment terms, currency, all of it, automatically. Third, matching and validation. The extracted data gets cross-referenced against your purchase orders and delivery receipts. If everything lines up, it moves forward without you touching it. If there's a discrepancy, it gets flagged for human review. You only deal with the exceptions. Fourth, intelligent routing. The AI learns your approval patterns. Who signs off on what? Dollar thresholds for auto-approval, end-of-month behavior, even out-of-office adjustments. Fifth, sync. Approved invoices flow directly into QuickBooks, Xero, FreshBooks, or NetSuite. Zero transcription errors. Clean records. Done. If you're finding this useful, hit subscribe. We cover AI automation specifically for small business owners, freelancers, and agency operators. Practical systems, not theory. Now let's talk about what you can actually use today. Ramp Bill Pay handles end-to-end accounts payable with AI agents. They claim 99% accuracy on line item data and 4 times faster processing. Built for teams who want hands-off AP without enterprise pricing. Rawsome is strong if you deal with high volumes of varied invoice formats. It uses proprietary AI that learns from your human corrections over time. The more you use it, the smarter it gets for your specific vendors. GenFuse AI is worth mentioning specifically for non-technical users. You describe your workflow in plain English. No coding, no complex setup, and it connects to Google Sheets, HubSpot, and QuickBooks automatically. If you've been intimidated by automation before, this is your entry point. V7. Go targets what they call agentic automation, aiming for 95% fully automated, 5% human touch. For high-volume operations, that's the destination. The common thread across all of them? They get smarter with every invoice they process. These aren't static tools. They're learning systems. So what does this actually do for your bottom line? Processing costs drop by up to 42%. Invoice cycle times cut by up to 80%. Error rates fall by up to 90%. And the market is betting big on this. AI invoice automation is projected to grow from $3 billion in 2023 to $9 billion by 2031. That's not a niche trend. That's a tidal wave. Beyond the numbers, you capture early payment discounts you used to miss. Your vendors get paid faster, which strengthens those relationships. And your data becomes clean enough to actually analyze your spending and negotiate better contracts. This is compound leverage. Not just saving time today, building financial intelligence for tomorrow. But I have to be honest with you. This isn't perfect, and there are risks you need to know before you touch any of this. Risk 1. Garbage in, garbage out. If your existing financial records are a mess, AI won't fix that. It'll amplify it. Do a basic data cleanup first. Non-negotiable. Risk 2. Overtrusting too early. AI processes invoices at 99% accuracy. That remaining 1% matters when it's your money. In the first 30 to 60 days, manually spot check a sample of automatically processed invoices. Don't remove human oversight before you've earned confidence in the system. Risk 3. Security. This software touches your most sensitive financial data. Before you sign anything, read the security documentation. Look for robust encryption, role-based access controls, and built-in fraud detection. If a vendor can't answer those questions clearly, walk away. Risk 4. Integration lock-in. Make sure any tool you choose works with your existing accounting software and banking infrastructure. Avoid tools that only function inside their own closed ecosystem. So how do you actually roll this out without breaking anything? Start small. Don't automate everything on day one. Pick one specific workflow. Recurring vendor bills are the easiest starting point. Get that right before expanding. Measure obsessively. Before you start, document your current processing time, error rate, and average days to payment. After 30 days with the new system, compare. If you're not seeing meaningful improvement, adjust. Don't assume it's working. Train your team properly. Automation handles the volume. Your people handle the judgment, exceptions, vendor relationships, approval decisions. Make sure they understand their new role in the process, then expand. Once your pilot is running smoothly, extend to other invoice types, other departments, other vendors. Build from a proven base. Here's the bottom line. Invoice automation is no longer a tool for Fortune 500 companies. It's accessible, affordable, and operational for businesses of any size. Right now, in 2025. The businesses winning over the next 5 years won't be the ones with the biggest teams or the biggest budgets. They'll be the ones using AI as a force multiplier, letting machines handle the grunt work, while people focus on decisions that actually require judgment. Boring areas like invoice processing hide the biggest compounding gains. This is where the real money is. Drop a comment below telling me which tool you're most curious about, Ramp, Rawsome, GenFuse, or V7 Go, and I'll build a dedicated breakdown on whichever one gets the most votes. And if you want to see how other businesses are automating their entire back office, not just invoices, the next video is exactly what you need. Subscribe, we're just getting started.